Okay, great. Hello, everyone. I'm Janice, and I'm the director of the Low Income Taxpayer Clinic at Maryland Volunteer Lawyer Service. And I want to thank everyone for joining us today. We have a really interesting and timely topic today. So I think we're going to learn lots of good stuff. So if you don't already, please follow MVLS on social media. Lots of ways to see what we're doing. Lots of happenings, things happening still. Next slide, please. Great. Okay. We do want to encourage everyone to be a volunteer if you are not already. If you're looking for a pro bono case, say you can't sleep in the middle of the night and want to help somebody, then jump on our website and go to the pro bono portal. Next slide, please. Great. MVLS is approaching all of its cases now in a race equity context. We want to be aware of the impact of history. I do want to mention that the tax code does appear neutral on its face, but certainly can affect different populations in different ways. And so I think it's always important to recognize that, this is certainly a strange time in our history, and it's making everybody think about things. And also we're looking at institutional systems which have perpetuated inequities and the additional obstacles and hurdles our clients are facing. Next slide. Next slide, please. Great. So, we want to, in working with our clients, we want to build equitable relationships by using active listening skills, valuing the client's experience, and approaching hopefully with a non-judgmental attitude. We ask our volunteers to understand the past experience of communities of color with the tax system, and also give additional space for clients to ask questions. Next slide, please. Great. So again, this is our pro bono portal. Our cases at MVLS are categorized according to the type of issue, and the little blue box is tax. It's a small but mighty box. So definitely check on that for ways to implement the information that you're receiving from the trainings to take on a case and get some real life experience. Next slide, please. Great. Just as we have many, MVLS has lots of trainings and webinars such as this one that are recorded. Michael has generously agreed to let us post this one also for our volunteers to listen in the future, as well as the slides. Next slide, please. Great. So if you aren't already an MVLS volunteer, lots of great benefits, including access to these trainings and webinars, as well as doing something good that can be helpful to people. So next slide, please. And then with that, I am going to turn it over to Michael, who is going to tell us about IRS informational return penalties. So this is really interesting because I don't know a whole lot about this, so I'm eager to learn. So thanks, Michael.
Absolutely. Thank you, Janice, and thank you, MVLS, for having me today. For the audience out there, thank you for joining me. I greatly appreciate the support. And as always, please take some MVLS cases if you can and you have time. The portal is an amazing, amazing tool that you can use to look through and see what's available out there. And I love just perusing through there and seeing what kind of crazy cases MVLS has that I can kind of help with. But my name is Michael March. I'm a senior attorney at Crapo Morges. I primarily practice in the tax controversy and corporate litigation world. And today I'm going to talk to you about informational return penalties and kind of how to mitigate them. And I think what I really want you to walk away with today is to kind of say, all right, I can look at one of these IRS notices and understand the background and maybe even find a couple of different resources using this PowerPoint to find some answers. And like Jenna said, this will get posted, the webinar will get posted, and we'll sort of go from there. Oh, senior associate. All right, so prior to beginning today, this is my circular 230 reference that I give with every single presentation. So this is not legal advice. This is just helping practitioners issue spot and providing a little bit of information. So please don't call me right on an online forum, Michael said, because every fact and circumstance is different. Every case is different. Every client is different. But my hope today is to kind of educate you on some of the informational return penalties, what's going on, how to mitigate them, and kind of just give you that baseline understanding and knowledge for you to kind of be dangerous out there. So please, this is not legal advice. All right, so what is an information return? An information return is applicable when any person is engaged in a trade or business, including a corporation, partnership, individual, state, trust, who makes reportable transactions during the calendar year. If you have those types of reportable transactions, you have to file an information return with the Internal Revenue Service. And an information return is exactly that. It just provides information to the Internal Revenue Service. There's no type of tax that is really associated with information returns. So as you start to think about that, a couple of the examples and some of the things I'm going to go over today are these 1099 miscellaneous, the 1094B, the 1094C, 1095C, and 1099. 1094s and the 1095s are really what I want to talk about today as they apply to the Affordable Care Act. I'll also walk around some of the 1099 Ks and discuss them at the end of this. But what I really want to discuss today is the 1094 and the 1095s. Like I said, throughout this presentation, there's a number of links that are embedded. You can see one right here. So this link right here is one of the best links I've seen. It talks about all of the type of information returns as well as the penalties associated and your reporting requirements. So if you have any type of questions right off the jump, this is where to start with. And all of this is on the IRS website, so it's good information. But one of the takeaways from these, and I hope if you go back and look at my slides with these links, because they really can point you in the right direction and hopefully fill in some of the holes that maybe I missed or I just can't get to during this presentation. All right. So what are they? Forms 1094 and 1095. A Form 1094B is the transmittal. So if you think of a 1096 that transmits 1099s, a 1094B is nothing more than transmitting the 1095-Bs, which is health coverage. A 1094C is the transmittal of the employer-provided health insurance offer and coverage. And the 1095C is that health insurance offers and coverage insurance. And for the first half or third of this presentation, this is kind of the world in which we are operating. So at 1,000 feet, these are information returns related to healthcare provided to employees by the employer. So these are employer reporting requirements for the most part. A lot of it applies at the individual level, but the employer is responsible for filing these returns. And real quick, I just want to show them to you. My technology skills are not the greatest, but hopefully I can get you there. Can everyone see the 1095C on my screen right there? See if I can switch it real quick.
No, the slide says Forms 1094 and 1095.
How about now? Does it show up now?
Yep.
All right, so this is a 1095C, just to kind of give you a point of reference and break it down to the granular. So you got your employee, Social Security number, the name of the employer, the offer of coverage right down here at the bottom, the employee required contribution, right? We're going to get into the law behind why some of these questions are being asked. But at a very basic level, this is the return that is being submitted by the employer on behalf of the employee for health insurance coverage. Fairly simple. Usually this is just kicked out automatically through a database, usually through your payroll company. But it's always important to kind of break it down to the most simple part, and this is where it all starts. Alternatively, there's also a 1095B. This is for individual health coverage and also breaks it down for your dependents down here. Sometimes your tax preparation firms wax for these. We'll talk about that a little further, but this is the other form that is really the basis for what we're talking about today, and it is the health coverage. Again, the employer name, the name of the responsible individual, just very, very basic information about health coverage that is offered to your employees. But important to have these. If you ever need forms like this, you can go onto the IRS's website, Google 1095B, 1095C, and they'll pop up. They change slightly from year to year. This is the 2021 form. I don't see anything that really jumps off the page as far as being different from the 2020 form, but keep that in the back of your mind that they are different and dependent on the year. All right, so I'm going to try and go back to the share here again. All right. All right, there we go. That's pretty good. Not bad for technology there. All right, so broke down the forms for you. Pretty simple what's going on here. Let's keep on going. So who must file forms 1094 and 1095? This is, oops. There we go. What is going on my screen? 1095B is every person that provides minimal essential coverage to an individual during a calendar year must file an information return reporting the coverage. So I work for a fairly small firm. They offer me health insurance coverage. They must thereafter report that health insurance coverage through the informational return to the IRS. A 1095C, like I just showed you, is an ALE member, an applicable large employer. We're going to talk about exactly what that means. But the point here from this side is if you are an ALE, and this is kind of the world in which we operate, right? There are ALEs, and then everyone else is kind of not an ALE. So it's one or the other. And just keep in mind, like, you can't turn off, unfortunately, through the next couple of slides if you're not representing or you're not part of an ALE, because if you are offering health insurance coverage, there are reporting requirements, like through the 1095B and the transmittal form, depending on how many employees you have covered. So if you want to break it down from here, think about it. Best way to think about this slide is there's a difference between an ALE and a non-ALE, and kind of keep that in your mind. All right, so what is an applicable large employer? And I can't tell you how many times I've run into people saying, I didn't even know I was an ALE. So that's kind of crazy, but it does happen out there. So if an employer has at least 50 full-time employees, including full-time equivalent employees, which we're going to talk about, on average during the prior year, the employer is an ALE for the current calendar year. It is therefore subject to the employer shared responsibility provisions and the employer information reporting provisions. So basically, if you're an ALE, you're required to offer minimal essential coverage to your employees, and failure to do so either means you're going to pay a penalty or you're going to get a couple of notices from the IRS basically asking what's going on. To determine if its workforce is an employer adds a total number of full-time employees for each month of the prior calendar year to the total number of full-time equivalent employees for such calendar year, and divides the total number by 12 again. So this is kind of a quirky calculation. People who just work with the PPP funding is very familiar with this because they had to disclose this in the loan forgiveness documentation. And the takeaway from this slide is that if you have a bunch of part-time employees, you can still be an ALE. I think the next slide goes into this, but basically what happens is, I think it's 30 hours per week. So say I have 3 employees who are working 10 hours per week on average. You add up those 3 employees, they hit 30 hours, all of a sudden you have 1 full-time equivalent. So takeaway is, just because you have a bunch of full-time employees doesn't mean you won't cross this 50-person threshold. So keep in mind, I'm sure that's some type of a stopgap or abuse provision installed by the Internal Revenue Service. And at the end, I'll talk about the policy a little bit behind, I think, what's going on here. I think that's kind of the backdrop here, is to make sure that, you know, everyone has access to health insurance and the way that it works. So here we break it down. What is a full-time employee? A full-time employee for any calendar month is an employee who has an average of at least 30 hours of service per week during the calendar year, at least 130 hours of service during the calendar month. A full-time equivalent employee is a combination of employees, each of whom individually is not a full-time employee, but who is in combination are equivalent to a full-time employee. So like I said, I have a person that works 40 hours per week. They're a full-time equivalent. That's 1 in my formula. If I have 3 employees who each work 10 hours per week, all of a sudden I have another full-time employee. So I have 2 full-time employees. So that's just the takeaway from here, is just because you have a bunch of part-time employees, don't think you're automatically outside of the ALE context. Because what can happen is you add up the part-time employees, and then all of a sudden you could be crossing one of these thresholds. There's a calculation down here. I'm not going to go over it, but you should know it's out there. If you ever get into the granular, whether or not you're an ALE, look through these numbers, run the formula yourself, see what it happens. Also, it's worth mentioning it's for the previous year. So if you had a decline in business, or everything through COVID has been kind of crazy, so certainly things can change, but certain things to certainly think about. So this is where this really kind of comes from, and the 1094 and 1095 reporting requirements are really part of this employer shared responsibility provision. So I'm starting, you are an ALE, an applicable large employer. If you are an applicable large employer, you have employer shared responsibility provisions. You have to provide minimum essential coverage that is affordable and provides minimum value. Those are both terms of art. You can see, again, I have an embedded link for a minimum essential coverage, which kind of breaks down the minimum value as well as the, what is affordable. So if you need to go that far down, for the most part, I haven't gotten to any type of litigation surrounding that. For the most part, like, you're kind of plugged into a plan and it sort of goes from there. Very rarely, if ever, have I ever seen where, sure, we offer a plan, but that plan is not, affordable or, provides minimum essential coverage. I haven't seen anything like that yet, though, but I'm sure it's out there. But again, the embedded link, check this out. So you're an ALE, you have to have that minimum essential coverage, and here we are. This is the world in which we operate. Make sure I'm not missing anything else here. So it's affordable, provides minimum value to their full-time employees and their dependents, or potentially makes an employer share responsibility payment to the IRS. So an ALE can essentially opt out of providing the health insurance coverage, but they will be responsible for making that payment to the Internal Revenue Service if they do not. So it is a one or the other. Either way, you're going to be on the hook. So kind of keep that in mind as well. So employer share responsibility payments. An ALE member will owe the first type of employer share responsibility payment that does not offer minimum essential coverage to at least 95% of its full-time employees. And at least one full-time employee receives the premium tax credit for purchasing coverage through the health insurance marketplace. I'm going to talk about premium tax credits in a little bit here, and after I kind of walk you through the world in which we are operating as far as LEs, ALEs, and minimum essential coverage, I'm going to talk about the things that sort of go wrong. And one of the things that goes wrong is these premium tax credits and the IRS's ability to reconcile individuals who are maybe not offered health insurance through their employer, but are claiming the premium tax credit on the website. So we'll walk through that in a second. But even if an ALE member offers minimum essential coverage to at least 95% of its full-time employees and their dependents, it may owe the second type of employer share responsibility payment for each full-time employee who receives the premium tax credit for purchasing coverage through the marketplace. So what kind of happens here, and I guess I'm moving quicker than I would like to, but what happens here is that your ALE offers health insurance that is not economically advantageous to you. As a result, you go through the Obamacare or the Maryland Healthcare Exchange and purchase health insurance through the state of Maryland. Let me just cut it off right there and kind of move on to the next page. But here again is another embedded link for a minimum value and affordability. Like I said, I haven't come across this yet. For the most part, ALEs are plugged into like a larger service provider, whoever that may be. And for the most part, those plans are pretty standard. But I guess this could theoretically happen in the context. So here, this is kind of what happens, and this is mostly based on things that I've seen over the last year or two, and not necessarily out there. So either I submit my information return and it is incorrect, or I do not submit it at all. So the first one here is an employer was an ALE and did not know that they were an ALE and were required to offer health insurance coverage. Going back, if you think about the full-time equivalents and the part-time employees and whether or not that calculation adds up to 50 or not. So you could have some interesting conversations about whether or not you are actually an ALE dependent. And I'm certain that timing differences kind of come in here too, where maybe I was an ALE last year, I'm not an ALE this year because of COVID-19 and restrictions in the workforce and those types of items going on. But that first thing, the first one I would start is if I see one of these notices, am I dealing with an ALE at all, right? Does this employer have more than 50 individuals that employs full-time and usually the full-time equivalent? So start there in your head. The second part, and this is what I see more often, is that the forms were submitted incorrectly into the Internal Revenue Service. Way back on the first or second slide, I walked you through the transmittal. I didn't walk you through, but I mentioned the transmittal forms. Sometimes there's errors in the transmittal forms. Sometimes there's errors on the actual 1094 or 1095. So that is where the substance of the return is incorrect. And for most of the ALEs that are very large, there is a data upload to the Internal Revenue Services database. And a number of things can happen with that upload. Like I said, the transmittal form can be incorrect or have a piece of information that is incorrect. The other thing that we have seen is that sometimes the upload breaks. So you're going to the preparer, whoever is responsible is uploading your transmittal form with all of the information. During the process of the upload, the code breaks. And next thing you know, the IRS doesn't get all of the information. So you have almost like a mismatch in the IRS's database. The harder part with that one is figuring out, is it actually broke, because you don't always know. So if you think about it in those lines, sometimes it's not even the information on the return, it is the process by which the return is submitted to the Internal Revenue Service. And that is a very difficult thing to find out and understand. And we'll talk about, a lot of times it's, you get this notice about, it doesn't necessarily always say that it's an Affordable Care Act penalty. Usually it does, but a lot of times in controversy, there's a stream of notices. And after a certain stream, you've kind of lost the substance of what the source of the penalty is. So going back and trying to figure out, is this an Affordable Care Act penalty? Was it the upload? Was the return wrong? What's kind of going on here that's creating these types of penalties, which are incredibly substantial? The last thing, and I think my next slide goes over this in detail, is the premium tax credit was claimed for an employee to which a 1094 was submitted. So again, if you think about it, if somebody went on and obtained health insurance through the Maryland Exchange, Thereafter, if their income levels are below a certain level, and I'm not exactly sure what that number is, they can obtain government assistance for paying a portion of their health insurance. That is the premium tax credit, right? The government is paying a portion of that person's health insurance. What we see in practice is that the IRS is very good at reconciling these premium tax credit individuals with health insurance 1094s and 1095s. And then it comes down to, all right, you're an applicable large employer, but you have individuals claiming premium tax credits. Sort of what's going on here? Explain this to me. And I think you get a lot of correspondence from that. So the Tax Cut and Jobs Act, and this is just of note because this is always on everyone's mind because of individual tax filings, but the Tax Cut and Jobs Act removed the penalty for not having health insurance at the individual level only, right? So I work for an applicable large employer. They have health insurance for me. I say no thanks. Thereafter, I don't obtain health insurance through the exchange. I just go without health insurance. There's no penalty anymore on the individual tax return where there was over the last couple of years. So just a subtle difference to remember in this context and kind of remember where we're at and kind of what we're talking about. Here's my slide on the premium tax credit, known as the PTC. It's a refundable credit that helps eligible individuals and families cover the premiums for the health insurance purchased through the health insurance marketplace. To get this credit, you must meet certain requirements and file a tax return with Form 8962 Premium Tax Credit. Like I said, this is where an individual goes to the marketplace. They obtain their health insurance through the marketplace, or Obamacare as it was called previously. Thereafter, they fill out the 8962, and the government basically refunds them or provides a credit for a certain portion of the amount of health insurance that they have paid during the year. It's based on your income, it's based on the number of people inside of your household, those types of, almost like a collection standard for the Internal Revenue Service. But the thought process is basically, how do we make, the thought process being from the government end is, how do we make health insurance available for absolutely everyone and make sure that it is actually affordable? The premium tax credit, here's another embedded link. Premium tax credit, this is where I've seen, like I said, out of all of the issues I've seen on the previous slide, if we go back, the premium tax credit is probably the most interesting one that I've seen is because not often, or I wish it would happen more often, is where the IRS is reconciling databases and understanding what's being submitted to them and analyzing what's being submitted to them, right? And you're almost getting like a database mismatch here where you're seeing the premium tax credit on top of a 1094 being filed with somebody saying, usually people don't have health insurance through two different, mechanisms. What's going on here? Why would this happen? And even for an ALE with hundreds of employees, if one person or even two people are claiming that premium tax credit, it's going to raise questions. So out of this entire slideshow, I think this is probably, it's not the most important, probably one of the most important slides is, what went wrong here? Why am I getting these correspondence from the IRS asking me questions about, health insurance coverage? And I think this is sort of the checklist to run through. Certainly, this is not an exhaustive list by any means. There's certainly other things that could happen, but in my practice, this is what I've seen. Like I said, the ALE didn't have their health insurance coverage at all, or the forms were submitted incorrectly, including the transmittal form. The upload to the Internal Revenue Service platform was corrupted during submission or failed, which sometimes the preparer or payroll service doesn't always know. And then the last one, like we just talked about, is that premium tax credit was claimed by an employee who also had health insurance through their employer. Like I said, a database reconciliation that kind of causes issues as well. So if you think about what's going wrong here, I'd say this probably encompasses 90% of what could be going wrong. I'm sure there's 10% out there that are things that I haven't seen yet, but for the most part, this is the world in which I am dealing with. And I think the more important part, or what I'm going to next is, all right, one more slide before that. We talked about the premium tax credit. If you have any questions, always feel free to reach out to me. I have a contact slide on the last here, and I know I'm moving fairly quickly, but I want to get all this information in so that you can kind of have these resources and get your money's worth today. So the penalty amounts for either a failure to submit a 1094 or submitting a 1094 incorrectly is $280 per form. So imagine if you have 1,000 employees, an applicable large employer has 1,000 employees, $280 per form. All of a sudden, you're looking at astronomical penalty amounts. And one of the things that I talk about further down this presentation, but one of the things I keep in my mind is, why are these penalties so large? Because they're absolutely astronomical. And I think it goes back to the healthcare system in the United States and some of the problems we have as a country, basically. And I think the way the Internal Revenue Service and to some extent Congress views these ALEs as kind of a stopgap or fixing an issue in the system. And that issue being, how do we get health insurance, affordable quality health insurance to every individual in the United States? And I think the way to do that, or at least the IRS's way of thinking to do this, is to force these ALEs into it. And how do we force an ALE into it? We have astronomical penalties if they fail to comply. So I think if you think of 1,000 feet of the policy behind these types of penalties, which are huge, that's kind of what's going on here. Is I think it's kind of a policy-based standpoint to make sure that, you know, health insurance is provided to everyone. The way to do that, or at least the United States way to do that so far, is to get these ALEs on board. If the ALEs aren't on board, then you're looking at premium tax credits in the exchange. So that's kind of like the health insurance. Obviously, we're not here to talk about health insurance necessarily, but information return penalties as it relates to health insurance, I think that is the policy behind it. And something fairly interesting. I think I'm going to write an article on this soon, so hopefully you guys will check that out. We'll see if we can get Janice to post it. So how do you fix it? At the end of the day, Michael, give me my money's worth for attending your presentation today. It depends. I hate to give you the lawyer answer, but there it is right in front of you. So the controversy practitioners out there know that, you know, how to fix a situation is always dependent on where you are at in that situation, right? Are we pre-assessment? Are we post-assessment? If we're pre-assessment, then you get a string of notices that basically say, the first one says, hey, we noticed, you know, you didn't provide health insurance, or there was a mismatch with your health insurance. Explain this to us. Please fill out these forms. One of the things, fill out responses to these forms. Be really, really clear. I always say, like, I try and write as clearly as humanly possible in these types of situations. Provide as much documentation as humanly possible, right? A lot of times ALEs go through an open enrollment period in which they provide notice to all of their employees. Boom, you've been offered health insurance. Here's our open enrollment. Here's the letter that went out to all our employees that says that we have open enrollment. That can close a case right away, where alternatively you ignore these types of notices, and next thing you know, you've got a notice or an assessment in the mail that's absolutely gigantic. So respond to the notices. Really, really simple documentation can fix these types of issues. But I think it is responding timely. Another thing that you can also use that as a resource is Jim Leith in the Taxpayer Advocate's Office. If you miss some of these notices, or maybe you need, you know, a little bit more information or some help getting the information to the individuals, or maybe during COVID-19 you're not getting a person responding, or you can't get into the phone lines to call and get somebody on the phone, use Jim Leith, use Taxpayer Advocate. They're certainly amazing at doing those, you know, filling in the gaps types of things. So I would use him as a resource too. So, like I said, pre-assessment, respond to the notices, explain what happened. If it's a premium tax credit issue, you might not have all the information at hand. And on these notices, a FOIA request is probably going to take too long. So you're going to have a little bit of an issue getting the information and sometimes identifying the source of what the problem is. So calling the notices, waiting on hold. There's new third-party software that allows you to jump the line. I don't know if it necessarily works for specialized lines like this, but it's certainly worth a thought. Post-assessment, offer and compromise, doubt as to liability, explain the situation, right? I did offer health insurance, or I don't understand what's happening with the premium tax credit, those types of thought processes. A penalty abatement request could certainly work. There's a conversation I've had with a couple of practitioners of whether or not, you know, this is a tax or this is a penalty. I don't know. I haven't seen that played out yet, but I would be interested in that, you know, to see maybe a tax court case over the next year or two, because I do think this is going to be a little more prevalent over the next year. And of course, any penalty abatement request is going to have that good faith attempt to submit correctly, but the error occurred nonetheless. This is IRS Notice 2020-76. I should have included a link. Maybe I'll go back before this is submitted and include the link for it. But it is like anybody else that's filing penalty abatement requests has kind of gotten used to this ad nauseum. It's a good faith attempt, right? We tried to provide health insurance, or more likely, we tried to submit the forms correctly to the Internal Revenue Service, or we tried to fill out the forms correctly to the Internal Revenue Service. And for something that was just out of our hands, the tax preparer made a mistake, the upload was corrupted, etc. That's the context of those types of situations. So certainly post-assessment and pre-assessment to that matter, if you are trying to explain what happened, it is dependent on the error that occurred. That's obvious, right? But I think finding out exactly what that error is probably not the most easiest sometimes, especially if you're having a hard time contacting someone. So I think for the most part, this is the world in which you are operating. Respond to those notices. Get taxpayer advocate involved if you need it. Sorry about that. Get taxpayer advocate involved if you need it. After that, offering compromise, penalty abatements, good faith basis, those types of things kind of go a long way. But this is sort of where we're at. I think this is going to be more prevalent over the next year or two. I think as the IRS increases their ability to reconcile the databases and look at the premium tax credits, we're going to see more of these notices. So it's certainly something to keep in the back of your mind. All right, moving on. So I'm going to cover two other information returns that are submitted and some of the items I see kind of going on.
Michael, before we move on to the next topic, maybe if you could take a look at this one question about health insurance. I'm not sure if you have an answer to this, but
yep. Sorry, I'm in like minimized mode, so I didn't get to see it. I have a tax client who is a single shareholder in an S Corp. Is the corp required to give him health insurance? Great question. So this goes back to my ALE, whether or not they are an ALE or not. If they are an ALE with more than 50 individuals or full-time equivalents, right, you're crossing that threshold, then they would be required to offer health insurance. If they are under the ALE threshold, they have less than 50 people. Then it's really up to them. There's no requirement. And I think that's kind of a policy decision, again, on behalf of the Internal Revenue Service to say, all right, if you're a small mom and pop shop, you don't always have the ability or the financial ability to offer health insurance to your employees. Whereas I guess the IRS looks at those applicable large employers as having the financial wherewithal to be able to offer health insurance. So first, just because it's an S Corp or they're operating in a certain industry, there's always, things that I don't know. That's why the Circular 230 reference out there. So there's always additional facts. But based on what we were talking about today, assuming they have less than 50 full-time employees or equivalent employees, then they most likely would not be required to offer health insurance. And again, I'm just operating on the facts that's provided. There could be other things that are going on there that I'm unaware of, but the world in which we operate so far. All right. So are there any other questions about 1094s and 1095s? Because I'm going to move on to 1099 miscellaneous and 1099Ks here shortly. People moving? All right. Form 1099 miscellaneous. So this is where, person works for you during the year and you've classified them as an independent contractor rather than an employee. I have a couple of I think I did a misclassification audit webinar one time. If you ever want to look into whether or not you actually have an independent contractor and an employee, it is a fairly fact-intensive analysis, and it is dependent on, what is that person doing for you? Are they working for multiple individuals? Are you training them? Are you providing their supplies? There's like a 7-factor test that the IRS walks through, which is a little different than what a civil court will walk through for any type of wage claims. But nonetheless, we're in the context of you don't have a W-2 employee, you have a independent contractor. So as a result, they receive a Form 1099 miscellaneous. Most of the time I see these Form 1099 miscellaneouses filed with the incorrect Social Security number or tax identification number. Generally, the penalty for an incorrect Form 1099 or Form W-2 is $100. And the penalty for an incorrect information statement provided to the applicable taxpayer is another $100. So two different separate penalties going on here. In each case, there is a maximum penalty of $1.5 million for a total of $3 million. Again, these things add up incredibly quickly. These penalties can be significantly higher, however, in the case of intentional disregard, which can include a pattern of failing to file or filing incorrect information. In such cases, there is no maximum penalty. So I'll talk about this a little bit in the next slide, but what this really comes into play is immigration issues. So let me go to the next bullet point, and then I'll explain kind of what I'm talking about here. The IRS's 2013 guidance provides that the statute of limitations to assess these penalties for an erroneous Form 1099 or W-2 filed with the IRS runs 3 years after filing of the return. So this is such a quirky little rule that I see all the time. Accordingly, when a taxpayer fails to file a Form 1099 or Form W-2, the statute of limitations on the penalty will not begin to run. For this purpose, the filing of transmittal forms, such as a 1096 or a W-3, is not sufficient to begin the statute of limitations. So what this bullet point is saying here is generally the IRS says 3 years from the date a return is filed to assess additional tax. If the return is never filed, then the statute of limitations never begins to run. So to give you a little bit of an example, I work and I'm an independent contractor for an applicable large employer. They never file my 1099 on my behalf. Coming back, the IRS assesses a bunch of penalties because that form was never filed, but they can do it at any time. It doesn't have to be within that 3-year statute of limitations. Alternatively, I work for an ALE and I'm an independent contractor and they form a 1099 on my behalf with an incorrect tax identification number. The IRS only has 3 years to correct and file and assess a tax or a penalty based on that incorrect filing. So the IRS moves, at their own pace, so to speak, especially during COVID-19. A lot of things have been delayed. So if you're ever thinking about, do I file it or do I not file it, always file it because you want to get that statute of limitations on your side. Alternatively, you're looking at a client who never filed, statute of limitations never began to run, you're in a much different world. So pretty important bullet. The takeaway from these, as well as all these information return penalties, is that they can add up so quickly. The next slide, and what I want to talk about a little bit more here, is the filing of incorrect information in a pattern, and what the IRS classifies as intentional disregard. There we go. So how do I fix that? So generally I see this in business industries in which a large amount of undocumented workers are employed. And what happens is that when they are brought on, when the individual is brought on and employed, they generally turn over documentations with incorrect Social Security numbers, or tax identification numbers, excuse me. The easiest way to fix this, and I have an embedded link right here, is the Social Security number verification service. You punch in the individual tax identification number or Social Security number, and boom, it kicks back out the name so that you can match the name and make sure you are actually employing the correct individual, and that the tax identification number or Social Security number associated with that individual is accurate. This is the way to go. This is the cut off any type of issues before they actually occur. Obviously, in some business industries and segments, this is not possible. But if I was an employer and I was employing a lot of individuals, first thing I would do is two things: collect those documents, right? The birth certificate, your Social Security card, maintain a copy. Because a lot of this stuff, like I said, it happens a year or two down the road, assuming the return was filed for the most part. And if you have those documents on hand, then you're really ahead of the game. Additionally, save any type of screen output that comes from the Social Security number verification service, because it's going to show, we get into that reasonable cause type of argument and say, hey, I collected the documents, here they are. Hey, I submitted it to the Social Security number, here it is, and here's the output. I operated as the best I could under normal business circumstances as a reasonable, prudent business person. Those are the reasonable argument cases that I love, because it's already built in there for you. So if I was advising an employer when they're hiring somebody, or maybe if I'm talking to an HR representative, these are the things I'm saying, right? We're saving those documents. We're running the SSN check. What I see more likely is that we have these undocumented workers, or there's timing differences a lot of time where, somebody's waiting on a visa, maybe a visa expires. Somebody was on a visa for an educational standpoint and then it expired and now they're being employed. So a lot of times you'll have mismatches in the system, in the IRS's database, that are now being displayed that you didn't know about. And those kinds of things can happen year after year after year. If you imagine you have one worker that, their visa ran out and you've employed them for 3 or 4 years, the last thing you want is for the IRS to think you're kind of disregarding, their notices. And you will get the penalty notices that say, hey, we got a bunch of 1099s that don't match. Tell us why. Then you're filing a penalty abatement request. And the first time, or maybe even the second time, if you're pretty good, you're going to be okay walking through those. But the third time, the fourth time, the fifth time, that's when you're getting into the intentional disregard and really large penalties. Like I said, beware of the repeat offenders, the intentional disregard. Penalty abatement requests, I always take it as a two-step process. Certainly there are, take as many chances as you can, call in, hit that verbal penalty abatement request, see if it goes through. If it doesn't, submit the reasonable cause statement with a write-up, explain the law. Like I said, maybe you have this backup documentation, but that's certainly the way to go, is the penalty abatement. But above and beyond that, if I'm planning, if someone's asking me, I'm running through the documents, I'm running the verification checks, those types of things. So twofold right here, pretty good. Keep on moving. All right, moving on. Does anybody have questions about the 1099 miscellaneous and mismatches in the system? All right, Form 1099-Ks. This is an interesting kind of beast here, and I'm very excited for this in the future because I think it's going to be really, really prevalent. A Form 1099-K includes the gross amount of all reportable payment transactions. You'll receive a Form 1099-K for each payment settlement entity from which you receive payments and settlement of reportable payment transactions. Reportable payment transaction is defined as a payment card transaction or a third-party network transaction. Michael, what are you talking about? I'm talking about Square. I'm talking about Venmo. I'm talking about credit card transactions. I'm talking about third-party food delivery services, those types of things. Anything where a credit card is used, any type of electronic payment is submitted. So what happens is a copy of this, and I should have included a Form 1099-K output because they're really interesting looking. They break down the sales per month used on those credit card transactions. So what happens is the IRS receives a Form 1099-K on behalf of an employer. Sometimes the employer gets the 1099-K, sometimes they don't. Sometimes they get a portion of them, which really creates issues. And then the IRS is going to take that 1099-K for each one of the credit card or third-party networks used and say, all right, did this company report all of their income, right? Is everything reported on your 1120 or your 1040 Schedule C? And sort of go from there. And a lot of times what you see is if a 1099-K has more income on it than what your 1120 does, all of a sudden you've got that correspondence audit from the IRS asking you to explain what's happening. And actually, what happens in some of these cases, and I've had 2 or 3 of these, is that the 1099-K reports the total amount of the transaction. So say I am, running my credit card for my business, but all of a sudden I have to pay these third-party vendor fees that are coming out in between. Your 1099-K is going to report the gross amount of those fees, and it's not going to show the expenses coming out. And what that comes down to is an 1120 or 1040 reporting requirement where you're expensing those third-party fees correctly. But that's one of the situations I've seen where people are generally trying to report their income correctly, but the 1099-K just doesn't match for some reason. And the bigger issues with these, at least from the people that I've seen and the people that I work with, is that we don't always get the 1099-K or the 1099 at all, pretty much. So you're kind of operating in the dark. And I think it's the next slide, but it's not always easy to find what was reported to the Internal Revenue Service. Again, you can file those Freedom of Information Act requests, the FOIA requests, but it's going to take a while. So if you're under audit, that certainly makes sense. But if you're just writing back and forth to the Internal Revenue Service and trying to get it to go away quickly, then you're probably not in the FOIA world. So you're kind of operating in the dark to a certain extent, which has kind of always been my fear. But 1099, the point of this slide is 1099-Ks are out there. They're going to be used more prevalent in the future. So it's certainly something to watch out for. Here's another embedded link that explains 1099-Ks from the IRS's perspective. I think it also has a copy of what a 1099-K looks like. Again, it breaks it down per month to show. And I've had IRS agents also use that to run bank reconciliation analysis to determine whether all that money is coming in each month. So it really can be a tool that the IRS can use. We have a question. Since Form 1099 NEC replaces Form what activities require Form 1099 reporting requirements? Why do I need a 1099 miscellaneous? The last time I checked, it was over $600 worth of services provided during a particular year required a 1099 miscellaneous to be provided. I don't know if there's a filing threshold for a 1099-K. I'm guessing if it's any just reportable per transaction, but it used to be $600. But again, I haven't looked that up, and that's just off the top of my mind. So a lot of times I see it where you hire, someone as part of your business or to help carry on your business activities, and you pay them more than $600 during the year. They do need a 1099. You are permitted to submit that 1099 and sort of go from there. 1099-K, take away the basics: Venmo, Square, credit cards, bank reconciliation analysis to what is actually reporting on the 1120. Keep in mind the 1099-K is gross. There can be fees that come out of the 1099-K that are going to create mismatches on what's being reported. What if I do not receive a 1099-K? Is there another way to obtain the information? Again, I give you that lawyer answer, and I apologize. It depends. Sometimes, so if there is the 1099-K is submitted on behalf of an employer, there is no employer wage and income transcript that's publicly available through TDS, Transcript Delivery Services. So again, you're kind of operating in the dark. FOIA requests always provide them for the most part. So that's the way to get it if you're in an audit or if you're heading into appeals, which is a lot of time I send my FOIA requests in. Alternatively, if the 1099-K So let me back up a second. The credit card or the Square or whatever third-party payment provider is linked to either an EIN, employer identification number, or an SSN. So in the context in which it is linked to an employer identification number, you're not going to be able to get a wage and income transcript on behalf of an employer. But alternatively, if that third-party payment is connected to a Social Security number, you're most likely going to see it on their wage and income transcript. I usually see it for the most part. I feel like there's been a couple of times where I haven't seen it on an individual's wage and income transcript, so just be mindful. But that's the first place that I watch. And another thing I always have an issue with too is that I have an individual who runs a company. Sometimes they don't do it, or they do it indirectly, where that credit card transaction is showing up to their Social Security number. So the next thing you know, your IRS is looking at your 1040 and saying you're not reporting other income, but you're saying to the IRS, yeah, but I reported it on my 1120. This is just a mismatch issue. That's another thing to watch out for. What if the amount on the 1099-K is incorrect? Again, I just walked through that. It's really an expense issue. But the harder part is explaining that to an agent or through a correspondence audit and saying to them, like, yeah, sure, the 1099-K is a little high, but I didn't receive all of the income that comes out of there, and documenting where that income went. A lot of times there's like a third-party provider that's also embedded in the transaction that's getting a portion of the income. And you have to explain, like, all right, I've got an expense going out to them at the same time too, and that's why this doesn't match. But those are the reporting requirements that I have seen. I think the hardest part about 1099-Ks is knowing what the IRS knows. Because a lot of time your 1099-K is going into the employer based on the employment identification number. It's not going into the employee or the owner of the business based on their SSN, and there's no way to like verify. And I think that's probably correct and done on purpose in the way that, you know, the IRS doesn't want employers to know exactly what's been reported, so that you only report what's been reported. I know that's a little convoluted to say, but basically the IRS wants you to make a good faith attempt to report the income that has come into the business, not the income the IRS knows that's come into the business. So I think that's a little bit of the policy behind what's going on there. Again, what if the amount of the 1099 is incorrect? Prepare to document the file, show where those expenses went, show why it doesn't match. So how does the IRS move forward from here? That's one of the things I kind of always ask myself is, how do I prepare for the future? 1099-Ks are going to be more prevalent. I think you're going to see a lot more CP 2000 notices, desk audits. Maybe this even leads to full-blown audits when you get that type of information in your hands. But the way that I look at the 1099-K process is that it's easily computer-driven, right? We can take that database, we can compare it to an 1120, and an individual at the IRS, that is, never has to touch the information or ask questions, basically. And I think those type of automated processes, as the population continues to grow, is going to be more prevalent. And I hope that they make the 1099-Ks more accessible and the information more accessible. I've seen this in practice. So the 1099 miscellaneous, where you have an individual that's a repeat offender, they get referred to ICE for the most part. And then there's penalties coming out of an ICE audit, and then the ICE audit also conducts the audit too. That's where you have the ICE agent show up at your employer with a gun and that cool looking badge and everything. But the point being, this kind of stopped at the beginning of the pandemic, where ICE kind of moved forward with controlling the borders and the population. So I don't know if these audits are going to be picked up again. I also think this is kind of a regime thought process between a Republican and Democratic type of idealism. So I don't know if these will be picked up again, but it'll be interesting if they are. And again, I look at this as like a easy computerized system where we have these repeat offenders, we have the identification numbers, we know where the employer is located, so we're going to go visit them. It's just an easy, streamlined process. What I think gets caught up more in this bullet point is the policy behind the regime that is currently in charge in the United States. We talked about this a little bit before, the 1094 and the 1095. It seems arbitrary, and the penalties coming out of these are just absolutely astronomical. And the greater purpose, I think, behind that is to, you know, Congress's idealism behind how health coverage is supposed to be applied to the individual is through the applicable large employers, right? Forcing these large companies to offer minimum health insurance coverage. If you don't offer that minimum health insurance coverage, we're going to hit you with these gigantic penalties. So I think that's kind of the policy from there. It'll be interesting to see how that kind of moves forward. I think health insurance in this country has to be fixed to one extent or another, and it'll be interesting to see if that's kind of how it continues to be fixed. last and most important, what I hope to see, and I've kind of talked about this before, is the wage and income transcripts becoming all-inclusive. We're already starting to see it, even in my time. I've only been a practitioner for 5 or 6 years now, and I can tell you the wage and income transcripts during that time period have already become more holistic, right? Now we're getting 1098s. Now we're getting real property taxes paid. What else do I also see out there? The 1099Ks, like I said, I think they'll probably be incorporated, but I think eventually your wage and income transcript will be all inclusive through these automated processes, like I'm talking about above with the 1099Ks or the 1099 miscellaneouses. And I think it'll just be more inclusive process, a process by which, a database is really run to identify individuals not reporting their taxes correctly and sort of going from there. So, I always say, look at the wage and income transcripts first, look at the account transcripts first. The people that are practicing as controversy attorneys, I always live and die by the transcripts, and I hope everyone else kind of looks at them too, because it is always my first step of understanding what's going on. All right. So here's my contact information. Like I said, I'm a senior attorney at Crapo Mortgages. We are in Hanover, right next to Live Casino. If anybody ever wants to play blackjack with me, I'm more than happy to play. Michael at usataxlaw.com is my email. 667-900-9909 is my direct dial. Anybody out there in cyberspace, please follow me on LinkedIn. I try and post everything on LinkedIn, from the PowerPoint slides to the presentation to even notices, because I do try and host 1 or 2 webinars per month, especially during COVID. I greatly appreciate everyone who has joined me today. I hope that I provided some type of value to your practice, either through the context of the Affordable Care Act and the information returns there, the 1099 miscellaneous, the 1099Ks. So I hope I have provided some type of information that you walk away as being useful. And like I said, please give me a follow on LinkedIn, send me a friend request. If you have any questions, feel free to give me a call. I'm more than happy to discuss everything. And MBLS and Janice, thank you so much for having me today. I greatly appreciate it. And I think this might be it for the year for me. I'm sure, Janice, you have a webinar in December, I'm sure, right?
Actually, we're not. We're skipping December because I am going to be at the LITC conference, but we will start up again in January with Elena Folks, who is the DC taxpayer advocate. That will be a nice way, I think, to kick off the year. So we still have a few minutes here. If anyone has any questions, now please go ahead and put them in the Q&A box. I think we answered the last 2 questions, but if anyone has any, please go ahead and feel free to put that in. I think I had a couple of questions. This is all new to me, since we don't really deal with these issues as the low income taxpayer, although we do deal with them from the other side, from the individual taxpayer side, people not getting their correct worker classification and those issues. So certainly those are very familiar to us. So one thing I wanted to ask you with the, so for the first section, the 1094s and the 1095s, you were saying that companies, to fix it, they could do an offer and compromise.
Yeah.
And that would be a doubt as to liability, offer and compromise. How and I've not had any experience with offers and compromises for companies, but how does that compare to offers and compromises for individuals?
Yeah, so I honestly have not submitted an offer and compromise doubt as to liability on behalf of a company. But what you think about here is I always tell everybody, if you put an arrow down and it's your timeline for tax controversy, and in the middle of your timeline is assessment. If you're post-assessment, right, you've already been held liable, or the company's been held liable for not having health insurance for your individuals. What is the mechanism by which you challenge that actual finding, right? How do you challenge the assessment? I think an offer and compromise doubt as a liability would probably work, because it is kind of matching what you're trying to do, right? You're saying in this context, I did offer health insurance, or I did offer minimal essential coverage. It was just reported incorrectly, basically. So I honestly have not done one of these yet on behalf of the company, but I think it's most likely the way to go if you did offer health insurance and just something happened in between, like I said, like an upload mismatch or something along those lines. But I think the takeaway is the DTL is the way to challenge the assessment itself. Whereas if, you have an upload error, or your forms are filled out correctly or something along those lines, then you're looking more at a reasonable cause penalty abatement request. So I think that's just trying to match what you're trying to fix is really the thing to kind of look at there.
Okay. Great, great. Okay. Moving on, I had a question about the second section, the 1099 miscellaneous. You mentioned the statute of limitations starts once the 1099 is actually filed. But I think you mentioned people don't always file those 1099s, and why not? Why would you not?
Why didn't you offer health insurance, right? Why do people, I think a lack of knowledge is really what happens. And a lot of the people I represent, or some of the people I represent, are businesses that are getting off of the ground, right? Like, we started a business, we're 2 years down the road, and it's kind of exploded on us as far as a profitability standpoint. And now all of a sudden these kind of issues creep out of the woodwork that you didn't even know existed. And one of these is the 1099 miscellaneous, is where I have seen it is during audits and you're trying to expense contract labor that is above what the 1099s are reported on. So if you think of like all your 1099s reported for the year add up to $100 on your tax return, you have $150 in contract labor. Explain to me the difference. Like, why does this not match? And that's where I kind of see it. But to say, why does somebody not file the 1099 miscellaneous? I think for the most part, either they just didn't know, or maybe they were unable to obtain the information from the individual they paid, right? Like maybe the individual didn't have an SSN or a TIN or an EIN, something along those lines. But I think for the most part, it's just, these startup businesses that kind of all of a sudden become really profitable and they just didn't know.
Okay. And there is a question here about what is the penalty for failure to file that form? So I think you have the penalty here for an incorrect form, which is $100. And then
penalty for an incorrect Form 1099 filed with the IRS is $100. Penalty of an incorrect information statement provided to the applicable taxpayer is another $100. I think it's $100 too if you fail to file it.
Don't file.
Yeah, but don't quote me on that, because it could be slightly more. I would think that people would want, from a policy perspective, you would want the individuals to file even if they are slightly incorrect. So don't quote me on it. It might be slightly more, like 160 or something like that, but it's right around the same number. I'm sorry, I just don't have that off the top of my head.
So, but the key is make sure you file.
Just file.
Yeah, yes. Right. So, okay, well, great. Again, if anyone has any questions, please go ahead and feel free to put them in the Q&A box. Let me just check the chat real quick. Great. And then Michael, maybe if you could go back to your contact slide, and we can end with that so that people can see how they can reach you. Thank you. This was very, very eye-opening. It's not an area that I know anything about, so it's certainly very helpful to see, and really interesting to see that. Well, I guess, many companies, like you said, especially if they're starting up, they may not be aware of all the things that they need to do. It's very easy to omit things, not intentionally, but it just really shows you how important it is to get good advice and make sure you stay on track when you're starting any sort of business entity, or and making sure you don't get yourself into trouble later on, which is kind of where we always find people, right?
Right. That's controversy.
Yeah. So, okay. Well, great. Again, thank you for this. This is very interesting, and hopefully, for anybody who is interested in the slides and the recording, these will be posted on our website later on. Contact me. I have my email address in the chat box if you'd like a copy. So we do welcome you to join us as a volunteer. So, all right. Thanks. Take care, everyone, and thanks, Michael, for joining us.
Thank you.
Thanks. Bye.